Last Friday, on Bastille Day, July 8th, an ISIS terrorist killed 80 people, including 10 children, in Nice, France. Investors are worried about investing overseas because investing is always risky, and the more uncertainty there is, the more they worry. In the last 2 months alone, terrorism has taken lives in Europe, Asia, and the United States. This is a horrible strategy, but as an investment manager, I want to skip gears. In order to make money, you have to take risk. You have to be smart about it, though. It's becoming harder and harder to make money in overpriced markets. The US is so overpriced that overall, valuations suggest returns for index investors and closet index investors, like those who own the big funds and 401k plans, which essentially look like market cap weighted indexes, are likely to make 1 to 3% per year for the next decade. Most professional investors view risk as volatility, that is, short-term price movement. But in the long run, that's not risk. Risk is losing money you can't make back. In my last two communications to you, we talked about Brexit and investing overseas. I told you that I believe the selling was overdone due to the Brexit, and that opportunities overseas were probably better than those in the US. Based on long-term valuation metrics, developed overseas markets may return closer to their historical long-term trend of 8 to 10% going forward. Emerging market stocks are likely to do even better. But let's be realistic. No one in the US is going to invest all of their money overseas. In fact, most investors put less than 10% of their total risk budget overseas. We feel they should have half of the risk budget there. So a medium risk investor who has 50% in the US stock market should have about 25% overseas. Most of this should be developed markets, some of it in emerging markets. We feel we can be judicious about our US exposure. Not all US stocks are going to get 2 to 3%. I believe a savvy investor investing in great businesses that have a wide moat may get historical returns of 8 to 10% per year. Together with Morningstar, we've constructed a stock portfolio that owns only great businesses that we believe have the best future return characteristics. We've been offering this portfolio to clients for the last 2 years, and its risk and return have exceeded our expectations. Great businesses are companies that have wide moats. These businesses are so great that we expect them to make more money than their competitors for over 20 years. This is not our hubristic assessment. It's the assessment of Morningstar research. Savvy investors buying the great businesses below or at their fair value have historically had lower downside volatility and made higher returns than index investors. So wide moats offer this protection. Great businesses don't just exist in the United States. Over 4/5 of the global economy is outside of the US. We're working closely with Morningstar to gain exposure to these companies and hope to offer a global and international great business portfolio sometime in the next year. At the moment, we rely on our international managers for access to these companies and will likely always use them to some extent. The portfolio manager of International Value Advisors, a fund closed to new investors outside of fee-only RIAs, has been looking for moats with Jean-Marie Avillard since 1986. And we will use Grander Peak as a higher risk alternative to find smaller companies with greater growth potential that may later become future Moat companies. But it is our fiduciary duty to find the best way to handle our clients' money in the lowest possible fashion, the lowest possible cost. With this in mind, we're working with Morningstar to learn how to best construct an international stock portfolio that owns the same kind of great businesses we own in the US. We are excited that sometime over the next year we can bring this project forward and offer a global great business portfolio offering the same type of wide moat protection. Because this is the result of many years of research, and we're happy and excited to answer any questions you might have and learn whether this is a good fit for your needs. Thank you again for your time today, and we look forward to a continuing conversation.